Let's start with the monthly time frame. I mean, basically we've cleared all of the levels all the way to the top. We have this monthly time frame level down here, which is untapped all the way down at 25,913. And then we have this washed monthly level here at 61,421. It's gone through it. Let me have a look at the 3-month. So this 3-month candle closes today, and it looks like with the current price action that we're going to close above the previous all-time high. It's a really strong bullish close. You can see that this current 3-month candle is actually stronger than the previous 3-month candle. So basically for the last 6 months we've had only up, and you can see increasing volume. Can you see that? Increasing volume. So for all intents purposes, I don't have any expectation for this to go down. I have expectations for this to continue over the next 3 months. Doesn't mean we're not gonna see a pullback similar to this. You see that? So as that candle closed and opened, you had a little bit of a pullback and then a push up. Doesn't necessarily mean we're not going to see a little pullback, but this is a strong bullish continuation candle. It's definitely not a topping candle. Okay, you just have to bear that in mind. And potentially we're going to have another green 3-month candle, and maybe also another one. We might have 2 more of these, which would be very similar to the previous bull market. If you see these 3 monthly candles, you had 1, 2, 3, 4, and that took us to January. All right, so that's something to consider. Let me just do the monthlies now. Monthlies are fine. Okay, this is the weekly time frame. Let me just mark off these weekly levels. Get rid of the volume now. Got a little bit of lag. You have a washed weekly level here. I'll keep that. What I'm going to do is just mark it as washed, just so that we understand that it's not a clean weekly level. The same goes with this monthly level. That's a washed monthly level. Just keep an eye on it, just so I can identify what it is. Slightly lower down we have this weekly level. That's also washed. So I'm going to mark that as a washed weekly level. And obviously we have much lower down. I don't think these are going to be relevant. And I'll just mark them down anyway. Okay. Let's go to the daily time frame. Looking at daily levels. So today we've had a really strong bullish candle, actually, to my surprise. And that's, if usually when you're thinking down and the price goes up. Oh, is it lagging? Huh? Shit. I don't know what to do. Is it any better? I wonder if I should change the latency. Don't know. Is it still lagging, David? don't know what to do. It says the stream is fine. So I'm not sure. Let me, not lagging, yeah. It looks like it's fine on my end. It's like all green bars, and then sometimes it goes down and then it just comes back up. So I'm not sure what that is. There's some kind of lag spikes, but YouTube should sort that out. I don't know. Right. All right, let me just continue. Hopefully it's not going to go on for too long. All right, so these levels are good levels to mark, and I'll just continue. I'll do the daily levels. This one here, much lower down here. Now, just because I'm marking these levels, I'm not saying the prices are going to come down here. It's just good to know where the liquidity levels are, okay? And I won't go all the way down because it's pointless. And then if you look back at historic price action from the past to see if we have any kind of historic wash levels, we do. That weekly level was very important, this wash weekly. And then you have this wash daily. Let me have a look and see if that's relevant to the current price action. Where did it go? Wash daily. Oh, it's further down there. No. Okay. So we're well above the previous price action. Let me mark this all-time high as well. Okay. And then you obviously have this higher level here. Look, this is in the daily time frame. So you have this one here, and you have a daily level there. And then we have this current daily level, which is also now it's washed, which is there. And I'm going to mark that as washed. What does wash mean? Well, wash means that the price is traded through it at least one time. So you see, if it's not been traded through, then it's an untouched level. If and when the price goes up and it trades through that level, then that level becomes washed. Yeah, so you've already traded through it one time. It's still relevant. It can be still relevant as a horizontal flip for support to resistance or resistance to support, but for all intents purposes it becomes weaker and weaker and weaker. The first time you come to an untouched level, that's usually when it's it presents the strongest amount of either resistance or support. Yeah, so it's quite good to mark out these levels and identify what they are and how that will give you a bias on how the price is going to react around those levels. So I'm going to put all of that into my higher time frame levels. Okay. I'm going to have a look at the volume range now. Have a look at that. So what I'm first going to do is I'm going to have a look at the whole volume of the whole range. I'll just use the Bybit chart. I'm not really concerned about the full index. Let's have a look at that, see what's going on. RH is asking, great work, Amir, thank you. I'm just only just started What do you think about Voight? I'll have a look at Voight. I'm going to have a look at a lot of things today. What time is it? It's only 9:11. As long as my stream doesn't destroy me, I'm just going to stream until I get tired. Probably as long as it takes. I'll just be here streaming because I want to do my analysis anyway. So this is the volume range on the whole of the Bybit perpetual inverse perpetuals on Bybit. And we can see some things, some very interesting things. We can see that there's a value area high here. And actually, I'm probably going to have a look at Binance as well, just to see the volume range. Okay, so you have the value area high there. We have the point of control all the way down here. Point of control. And then for the sake of consistency, I'll put the value area low all the way here. What's interesting is that we have a high volume node right here as well. That's quite interesting. So I'm going to mark that off as a high volume node. We have a few more high volume nodes. I won't bother with those because they're quite low down. Now this high volume node in these highs is above the value area high. You see that? And this is for the overall range. RH is asking me, do you know BTC went to 9,000 on one exchange a few days ago? Probably scams. The reason why that happens is because the exchange is trying to make as much money as possible by liquidating the leverages. They're called scam wicks. So even though the true price of Bitcoin didn't go down, the exchanges will push the price down just to liquidate people, just to liquidate them. That's all it is. Yeah. So if you see an exchange with scam wicks, you should 100% avoid that exchange. Never use exchanges like that. That's the reason why I use Bybit, because Bybit doesn't do that kind of, hasn't got that kind of behavior called scam wicks. That's what they are called. All right, this is the volume for the whole range. So I'm going to put that in its own folder, call it volume levels. Okay. Get rid of this. Now what I'm going to do is I'm going to do something else. I'm going to break the whole range into two ranges. You can see there are two ranges in this range. Okay, and actually there's probably three ranges. Okay, there's one dividing line here. So you can say that all of this is one range in the lower part. Everything above that is the upper range. You see that? There's two ranges there. And also you can see that in this top range, there's also another dividing line here. And that separates the top range from the bottom range in the top range. Okay, can you see that? And that's very useful, because now what we can do, and it's not so relevant now as maybe when we were ascending through the price action, historic price action, but what we can do is once you've identified the ranges, you can do volume pools just on the ranges. So from where this low is to about here, do a volume pool, and this would be the whole of the top range. Okay, and I'm going to mark that off. To value area high. I'm actually going to rename it to higher range. High. Got the point control. value area low. Okay, so we've got that. Okay, so you've got your other reds. Okay, that's fine. Show higher range. Rename. Range. And then what I'll do is I'll break that range again. So we have this, just this part of the range is this part of the range all the way down to here. And then what I'll do on that is I'll do another range pull from here to here. All right. Okay, so we have a slightly different data. That's fine. And I will call that the previous bull market range as well. Value area high. It's not so relevant now because we're way above it, but it's good to have that to see if there's any kind of range. Again with the point of control. Got the value area low, roughly. And get rid of that. Get rid of that. Okay. So let's have a look at the volume ranges now. That's the volume ranges. And then you've got your higher range. Okay. So there's a little bit of cross on the previous ranges and the actual volume range. You've got your higher range and you've got the previous bull market range. And then you've got the high volume node is slightly higher. Okay. The other thing I'm going to do is I'm going to do a volume pull from the bear market low. The bear market low is basically this point here. And I'm going to take that all the way to our current price action. So this is basically the bull market volume area. So it's just the volume area. It's just the volume that's been put into the market since the bear market low. Okay. And what you can see is that most of the volume was put in at about $28,000. Okay. And it's good to keep an eye on that because we can now see if and when the volume changes as the price goes up. Okay, you keep an eye on that. So you've got the value area high, and I'm going to call that the bull market value area high, the bull market point of crop. So I'll just call that the bull market. And it might not be relevant now, but it may be relevant in the future if the volume area moves. Hold on, I have to send the message. 1 second. Okay, so I'll just keep that. There is any high volume nodes? Not really. Okay. And then I'll call that my bull market volume area. All right, so we have that, we have that, we have that. And then we have these higher time frame levels. Got that. Okay. right? So what else do you want to do? You've got your volume levels, you've got your higher time frame levels, you've done your volume levels, you've got your different range levels, and it's all lower. So we basically, as far as I can tell, we've cleared resistance. There's no more resistance. Effectively, that's what's happened. With all of this price action, what I'm looking at is a lack of resistance. We have one more level of resistance above us, and it's basically a daily level. Do you see that daily level? And that's it really. As far as I can tell, we've cleared all of the resistance, technical resistance on Bitcoin. We've got levels of support underneath us. Some are washed, some are untapped, and we're basically, as far as I can tell, we're basically into price discovery. That's what I'm seeing, because we've cleared this important level, which is the previous all-time high, the previous bull market all-time high. Okay, that's what I'm seeing now in the charts. The other thing you can do is this. I'm going to draw a VWAP. So I'm going to draw an anchored VWAP actually. I'm going to use this tool here called anchored VWAP. I'm going to do it from the bear market low. And that basically is the average volume out, the volume weighted average price, and it's anchored off that pivot. So from that pivot onwards, it will tell you the average price based on volume. And as the volume comes in higher prices, then the average price increases. And so right now, since the bear market low to the current price, you can see that the average price is about $36,000. And usually what happens is these VWAPs, as you can see, is they offer support. So if the price were to come back down, this VWAP would offer support. The other thing you can do is do it from previous historic price action. So you've got the previous bull market high, and you can see that the average price in the past offered resistance. You can see that here. And now you can see that in the previous bull market to the bear market low to the current price, that the VWAPs, the anchored VWAPs, are roughly at the same area. So that's really where the average price is. So most of the accumulation has happened roughly about $36,000 on average. Does that correspond with anything interesting? No. And what you'll find is as the price increases and as volume comes into the market, these VWAPs will slowly move upwards. And if the price were to come back down to these VWAPs, they would offer support. Okay, it's not very relevant right now because we're way above that. We are clearly above all levels. Okay, let me have a look at some other things. You've got this historic channel from the previous bull market. I do like it because it touches the, you see that back test there? You had it clearly offered support here. Here it was all support, and the midpoint offered resistance there, support, kind of offered support and resistance here. So that's not nice, that's not too bad. That's not a bad one to have. And then I would argue that this bottom part is also quite important. This, excuse me, these channels here. Is it historic? Potentially. Let's have a look. Is it to there? Or is it to there? I've seen both ideas. Ignoring the COVID low and this stuff. You see? I've seen that idea too. I've seen both ideas. And I've seen this one as well, where it's just from the COVID low to there. I've seen both ideas. If we were to take that one, the main thing is to have a look at the midpoint to see if you see a reaction. There is a little bit of reaction there and there. You see that? Or do you take the lower channel, which is a little bit more steeper from the COVID low to there, to the top? No, you don't. That's not good. Maybe to that one. Is that any better? Let me just color it. Any better? Not really. To the top. No, actually, that's not that good, huh? That's not great. So maybe this green one is the better one. And then if you just ignore the COVID low, maybe you have a slightly steeper channel. Let me have a look. Like this. Not really, because the midpoints don't really match. Potentially you have a trend line from these lows here as well. Maybe from this one here, like that. That could be your bull market trend line now. It's quite steep. It's about 48 degrees. If you take the current, let me do it from this low here. Maybe you would go to the 3-day chart to try and zoom in a little bit. Or even the daily. Try and just hone in that trend line. Maybe even zoom in a little bit more, just to get a nice accurate trend line. Maybe even more, huh? Get a really accurate trend line. Okay. Let's see what that looks like. Daily chart. So I don't mind that trend line so much. It wasn't lagging, it was your internet. There you go, David. I think I'm lagging because it says I'm dropping a few frames. So, but maybe it's not lagging. So you have this. I don't mind this bull market trend line, and maybe, you know, maybe that trend line. If you take the last 2 points of this bounce, and then a bounce. You know, next time we hit that line, that could really act as a strong place to buy. So it's good to have those trend lines. You can't use trend lines on their own. They have to coincide with other levels. But I would use that one because it's nice and steep, and we are expecting quite a bullish bull market this year. I like this outer this green channel that I have, and I do like the white one that I have as well. I like both of them, so I'm going to keep those. Let me mark those channels. So I've got my rename bull market channels, and then I'm going to rename that trend line to my bull market trend line. I don't know if I want to lose that trend line now. If you look at the trajectory, it's not bad. By the end of this year, we're going to be at, the trend line is going to be about 100,000. For all intents purposes, depending on how the price moves, it could bounce and bounce and bounce. It could bounce. That trend line can bounce. It'll be a good line to see if we lose in the future. If we get to higher prices, you know, the minute you lose that trend line, that'll be very easy to see. Yeah. So let's see if it bounces again the third time. I don't see why it wouldn't. Could you make a steeper one? Possibly. You could make a steeper one. You could probably make a steeper trend line. But I don't know if I would. It would be like that. See that? I don't know if I would do that. I don't like that we've lost. It came underneath it here. To be honest with you, I like trend lines where the price is held within the trend line. Let me just zoom in and see. Look, I don't like it how it came underneath here. But it does match, you see it matches there, and you lose the price here. Potentially there's one there, but there is a little bit of a match. I'm not fond of it, to be honest with you, but it might work. It'd be better to do it like this, like that. But then you see the line gets steeper and steeper. So for all intents purposes, I prefer this lower one. Yeah, I prefer the lower one. I'm not crazy fond about that, but it might work. It could work, huh? It's possible. So I'll mark that as well. Rename, create trends. I can spell properly. Right. Okay. David is saying try a GAN fan on the bull market trends. All right. It's not a bad idea. So I've got these. This is the one that I have. This is the bull market trend line that I have. So what I'm going to use is this GAN fan. That doesn't work because it's underneath it. I mean, it would work if you lose it, but we haven't lost it yet. And there's no inverse, is there? There's no inverse. Oh yeah, there is. There's an inverse. Let's have a look at that. Let me just zoom in a little bit to see what it looks like. Probably with this, you want to make it as accurate as possible. So let me just make it accurate. Should you do it to there? That'd be better. There or there? There. Probably there now. A 1-2 is nice almost. On the inverse. Up into the 1-8. Lost it, back tested it. Back into it, lost it, resistance, lost it. Couldn't get to it. Could probably change those actually to some kind of red color. Down to visibility 40%. I'm going to save that. Let me save all of these. I haven't saved it, so I'm just going to save it. One-eighth and mono white. Save as 3 white red inverse. Okay. All right. I think that's not bad because we do have a little bit of resistance on the 1-2. So if we do push up, then possibly we're going to have a little bit of a, yeah, it's not too bad actually. I'm thinking about it, it's not too bad. If we start going higher, I don't think we are, because it's quite a distance. We're in a bit of a range, huh, with this GAN. So I'll put it in my trend lines group, and maybe this one as well. So let me try this tighter one actually. Okay. It's hard to tell. It does work though. Look, look at that. Perfect. See how that perfectly lines up with the top of that inverse? You have the explosion and then you find resistance all the way up to there. It's still quite far up in the scheme of the price, you see? So I don't necessarily think it's going to hit that level anytime soon. So it may not be relevant. It may not be relevant at all, okay? So I'm not really going to use it. They work, but they're not, I don't know if it's going to be relevant. And even this one, it may not be relevant because the price is too far away from it right now. You probably, if you wanted to use the GAN, you'd probably have to. Don't know. Maybe the closest ones. Anyway, let me not get too distracted with that. Am I lagging? No. So from the bull market, the previous bull market high to the bear market low, the other thing I can do, which is very easy to do, is an extension. Okay. And honestly, looking at the current price action, I'm thinking, or 1 to 2. I'm thinking here because I'm seeing a kind of like a really strong V shape on the price action. So I think we're experiencing potentially some kind of breakout. And I think to myself, if you have a breakout, why wouldn't you go to the 1 to 2? Why wouldn't you extend that far? That's really what I'm thinking. I think a lot of people are talking about 100,000, which will take us to the 1272 here. But I think when I look at the price action, I think it'd be very weird for us to stop there after we're breaking out of this kind of pattern. If you're going to fail, you should fail like that. You shouldn't really go up to the 1.272 and then come back down and fail. I don't really see that. I think it'd be very weird to go up to the 1.272 after you've broken out on this idea and then fail. But it would be possible. I'm just saying it would be weird. Maybe what would be better would be a back test to go up and continue and push up to the 2. That's what I'm thinking, actually. So that's something to have. It's really important, these fib retracements. So that's on the previous bull market high to the bear market low, and a fib retracement on the log time scale, on the log the logarithmic chart, not the regular chart. What would it look like on the regular chart? Let me have a look. Let me just hide that and see what it would look like on the regular chart. I'll do exactly the same thing, but on the regular chart. Log. And it's very different, huh? Look, it's very different on the regular chart. What's that? 314. Should be 3414. 2414 as well. Where's the 2? Keep an eye on that too, but I prefer the log. Do you know, the other thing I was thinking was if you use this, this is the new bull market trend line. Is there a channel off that trend line? I think possibly, yeah. Possibly, yeah. Let me just draw it accurately. That's the thing about these trend lines. Just to line it up to that market channel. Okay. Where's the top part? Potentially to there. Zoom out a bit. It's up there, isn't it? Lost it. The hell? Okay, that works. What about the midpoint? Ignored. Just because it's ignored once, it doesn't necessarily mean it's going to ignore again the second time it comes into it. Still quite steep though, that's the problem with that even though it's correct, because you can see the trajectory is correct here, it's very steep, and it may not be relevant, you know, so I think that's really too steep. It'll be good for support if the price comes back to it, but to get to these upper lines, I think it's going to be too steep. But I think the angle might be right, which is why I'm interested in it. But you just have to find the right channel. That's the problem, because these channels are so subjective. To find the right channel is not easy, because you need the midpoint. There you go. You need the midpoint to connect. You see that? Midpoint's connecting. Support. Support. That might be the one. And then on the top part, you've got support until it breaks through. And a real sign of strength would be to flip the top of that mid channel into support as we're going up. That would be a real sign of strength. I like that actually. It's not too bad. It's kind of slimmer. It lines up with my bull market channel down here. And you see the midpoint is reacting there. And as you pull it back, it's acting as support here. Kind of ignores it a little bit, but it acts as resistance. It can ignore it. That's the thing. But you see when you ignore it, you do find support. And if you go through it, you can find resistance. So it does react. There is a reaction. That is basically, to all intents and purposes, that's a front run. The top part, there's a reaction too. So I don't mind it too much. And it just helps to see where the price is and where we are with regards to this channel. So let me keep that as well. I'll put that in the bull market channels. See where that is. We've got 3. Okay. And then obviously you have your trend lines as well. Let me keep those as well. Hi Dan, how are you? Thank you for joining me. I'm just on Sundays I want to do a later stream. I think a lot of people who tune in are in America, and also I get to see the end of the week candle as well, which I think is quite important. So I just deleted all my drawings and I'm redoing everything basically from scratch. It was a completely clean chart. It's good to do that because sometimes you will see something new. You'll just approach it and attack it with a new kind of perspective, trying to remove the bias. Something that was interesting was that I had a bias for us to go down. So looking at the local price action, today I took 2 shorts, and one of them I was stopped out, one of them I closed out, even though that would have probably been in profit right now. I only buy a small amount, so insignificant. When you're thinking down and the price goes up, you have to change your bias. Yeah, you can't just keep on thinking down if you're thinking down and the price goes up. Yeah, I was thinking down actually, you know, I wasn't thinking up. But you see, as the price goes up, you know, find strength, you have to change your bias. You can't just keep on shorting strength. That's what I'm seeing is strength. And I'm not going to long because we're in the highs, but I'm not going to short strength. I'm looking for weakness. You only short weakness. Yeah. And the thing is that even though there are like opportunities to short, there's swing failures to short. If you see here, that's a swing failure. Unless you get a really amazing entry, like you'd have to literally mark it as the price is coming down effectively. Yeah, that would be your invalidation, the pivot that's put in. You'll get a nice 1-to-1 on this type of trade at least, but you have to have a really amazing entry. You have to enter perfectly as the price goes up and comes back down. As it comes back down, you take the short, and that's your take profit. You know, you're 1-to-1 on that trade. So you're risking 1%. As soon as you get 1%, you take profit. And what you're seeing with this current price action, the way the price action is in this swing failure, is this. You had short center as the price came down, and as the price came down here, the shorts took profit at market and it pulled the price right back up. That's what that is. That's not longs entering. That's just shorts closing, taking profit. The shorts that are taking profit here are the shorts who took this swing failure, but they will quickly take their profit. Very quickly will take their profit. So that's a very viable trade, but you have to take a profit, otherwise it becomes non-viable. What you can see is that there was another swing failure here. Yeah. Swing failure. Same thing really. There's another viable short here. As the price goes up, as the price comes down, that's your invalidation. That's your risk. And you see how the price, it comes down, you make your 1%. You see it comes down enough to make your 1-to-1. And actually what happens is the 1-to-1s take their profit and the price continues. And so they're very easy swing failure trades on these pivots, but you have to take profit. And the only way to succeed in these trades is to enter very, very quickly as the price comes under. You can't delay. If you delay, you'll not get the right position and your risk to reward fails. If you enter later, then you're not getting the correct risk to reward that allows you to take these trades. So you effectively have to take the trade. You have to be really hot on the trigger and take it as the price crosses the swing failure price to the downside. I took this short and I was stopped out because I didn't take profit, because I didn't get a good entry, to be honest with you. I was building a short because actually what I was thinking was I was thinking that we would turn. I was thinking that. So I wasn't in a rush to take profit or close my short, and I got stopped out. Okay. The thing is that I didn't risk 1%. I risked 1/3%, because I wasn't sure. Yeah, I could see that there was strength from the price action. And when you see that there's strength, you're not going to go crazy. You're just going to take a small nab at it. And if the price goes down, then you can add to it and you can build your 1% trade. It doesn't really matter, because if you catch it correctly, the price starts going down, then it's going to go down. It doesn't really matter where you enter if the price goes down like that. Yeah. And so you don't necessarily have to go fully positioned when you do that. Okay. So I took 2 trades and I failed 2 trades. That is fine. I didn't go fully positioned. And actually I was hoping the price would go up. I always want Bitcoin to go up. I never want Bitcoin to go down, because I want the altcoins to pump. Okay. So we are actually underneath this swing failure. Okay. So even though I'm seeing strength, I'm seeing weakness too. Yeah, I'm seeing both. I'm seeing strength because we were able to come above this previous high pivot. I'm also seeing weakness because we weren't able to clear that one. So we're stuck at the moment, potentially. I'll leave those 2 lines in. And this is on the local time frame. And just kind of focusing on the local time frame a little bit. I'll also do a range pull on this local volume range, and I'm going to mark that off. Okay, I'm going to mark that off. Local volume range. Cool. Point of control. Value area low. knock that off. Put that down here, my local, my volume. Delete that. Let me have a look at the weekly time frame. It's looking good, the weekly time frame. It's a strong it's a strong candle. It is possible, you see, it is possible just because we have a strong green candle, it is possible that we pull back to go up. But I mean, it's a really strong candle, clearing a lot of levels. It's a bullish candle. You'd long that, wouldn't you? You'd long the pullback of that candle. You wouldn't necessarily, you'd look to long that because you're coming back into these red bodies, you know, these basically these order blocks. Effectively, that's what they are. So even if the price action of this weekly came all the way down to here, you would long that. You would long this weekly candle here. It's in the highs, but you would. So the other idea I had was my Elliott waves, which I've deleted now. Okay. And for all intents purposes, we're in an ABC correction right now. We've broken out of this inverse head and shoulders. This is like a, now that I look at it, it looks a little bit like a flat correction ready to go up. That's what it looks like. Some kind of your local volume range. Do I have the range here, the volume range here? No, I haven't done that yet. So let me do that as well. Higher range, bull market range, channel. I'll do another volume range as well. Okay, so this is quite interesting too. So where is my local one? It's just that little local one there. I'll put this into it as well. To local. Delete that. Okay, let me just have a look at XO charts. Let's see if I can see. I mean, we've been seeing bullish divergence all through this range. You see how the CVD is going down? We saw that. Price is just going up. There's crazy absorption of the price right now. So it just tells you that there's like people longing and limit, and they just don't care about the price. They're just longing, and they're just building their positions. And it's probably spot actually, because I don't see the OI going up. The OI is actually going down. It's called flat. CVD's going down. It looks like it's spot that's absorbing the price. That's what it looks like. Okay, so we have some we have a naked daily level above us and below us. I'll mark them out. I'm going to type them out. So, and then I can just mark it out. Naked daily block. Naked daily block. Seven 3400 66900 65600 62800. Let's have a look at the weekly. So we have a weekly naked point of control there, 71990. As this week closes, we're going to have one down here as well. So I'm just going to mark it down now, because we're obviously going to close slightly higher up. So 710, 710, and lower down at 63990. And obviously the monthly is going to close now as well. So let's look at the monthly. So we're going to have this monthly point of control at 67026. $67026. Okay. Buying tail. We've cleared those single prints and we have a selling tail at the top. Buying tail. Any more single prints? No. What about historically? Anything up there? What's all this? Yeah, look. No, it's a selling tail. Okay. Oh, why has it gone back to November clean? That's really annoying. I was on something new and it just vanished. Is it because I'm on the wrong one? Yes. Okay. Let me mark these levels. Daily. Seven, 3, 4. 6,900. 6,500. 6,800. Weekly levels. Over here. 71990. 710. 63990. Monthly. Six 7026. Okay, so you may be wondering what I'm doing, and what I've done is from exo charts. I've looked at the historic points of control which have not been traded through yet, and I've marked them off, and I've called them the naked daily, naked weekly, and naked monthly points of control. So it's the highest volume nodes in those periods where the price still hasn't traded through. And so usually what happens if the price comes back to those levels, there's a reaction. So I'm looking for the reaction because you can use those levels as confluence if the price comes back into those levels. Okay, and so here you can see that I have a naked monthly and a naked daily in roughly the same area. Okay, and so when I'm doing analysis for creating a trade plan, then I'm looking for areas of interest where you have a lot of levels that correspond. Okay, that's basically what I'm doing. So let me just call that naked box. That's there. And so if you were like to, if I'm looking to do a trade plan now, I'll have a look. I'll put all of these up. Trend lines, no. Bull market channel, no. I'll have a look and I'll see if I can find anything that corresponds. So okay, so you see So now you get a little bit of correspondence. So this is the actual volume levels. And you can see here that there's quite strong support because you have like 3 levels pretty much in the same area. But actually you have a little bit of support here as well. See? Local, what is that? Local, can't even read it. It's because they're on top of each other. You've got local point of control there, naked weekly point of control there. You have a local value area low here. Yeah? So you have 2 levels corresponding together. So you should get a nice reaction. You need 3 really to correspond. So that's lower down, and you got you. So now you got you add your higher time frame levels, and actually what you can see is that we have some good areas. We have a couple of areas of interest here. We have one at about $70,000, and you have one about $69,700. It's your areas of interest where you'll probably be thinking about longing if the price comes back to the. You have one lower, you have lower down. This is washed weekly, but you have the previous all-time high that acts as support or resistance at the moment. And then this is a really nice area of interest lower down because you have a lot of levels that correspond, and then much lower down here. You see these 3 levels correspond. So they're your levels of interest, and basically what you're looking for are liquidity areas of liquidity where there are orders, and this is what I'm doing. I'm trying to find where the liquidity is. You see higher up we've got this daily level, and then you've got this naked daily point of control slightly higher up. All right, so we have a little bit of resistance higher up, but not crazy resistance. But these are the areas where the price could react. All right, that was that. So the other thing that I was thinking about was these Elliott waves. That's quite interesting for most people. So we are in a wave 3, and now we're in a wave 4 of 3. Okay, I've done this before. I'm not going to go into Elliott waves now, but in a gist, quickly, just off the top of my head, I'm gonna basically, let me just go to the daily time frame. I'll do it now quickly, just very quickly, just roughly. I can't remember where I did it from. That's the problem, because I have to look at my other charts. Maybe I should. Let me pull the other charts on the other screen so I can just have a look at it, because I can't remember. Yeah, let me just do it like that, easy. Excuse me. Right, I know what I did. So basically, you've got your 1. That's your 0 to your 1. That's your to your 2. We're in a 3 now. Then there's a 4 and there's a 5. Okay. That's basically where we are now. No one knows how far the 3 is going to go. No one knows what the correction of the 4 is going to be like. And no one knows how far the 5 is going to be. Okay. So we're still in the 3. And within the context of the 3, there's going to be 5 waves. And right now we're in the 4. Okay. So let me just draw that for you now. Let me just change these colors. Green. So I'm just doing the 3 right now. It starts at the 2. It went all the way up to there. That's the 1. This was to the 2. That was to the 3. 4. 5. 5 will end where the higher time frame 3 ends. So that's like that. So each bullish impulse will have 5 impulses. Just changing the colors so we can see what they look like. Okay. Zoom in a little bit. Just mark it out perfectly so it looks good. Yeah. Okay. So that's kind of where we're at now. We're in the wave 4. The wave 4 will consist of an ABC. It could be it could be like the thing about the corrective waves is it could be so many different things. Elliott correct. I'll show you quickly if I can find it. There isn't really much good info on this that's easy to read. That's the problem. I think there's 14 in total, actually. I think I remember when I was reading the book, I remember it was about 14. Ah, this is useless. This is YouTube. This says 6 corrective patterns. Let me see if I can copy and paste the image. Oh, there you go. Oh, it's so really fuzzy. We've got a zigzag. See, ABC, which is kind of down and then up and then down. And actually, this zigzag, if you look at it, it's like 5 waves down, 3 waves up, and then 5 waves down. You have a flat, which is an ABC, ABC, ABC. This is an irregular. You see it's ABC, ABC, and then it's a 5 wave down. But effectively, in all of these, you're always creating an ABC. This is what complicates things. This A, B, C, D, E. And effectively, it's A, B, C, D, E, but it's still A, B, C, A, B, C, A, B, C, A, B, C, A, B, C. See that? A, B, C, A, B, C, A, B, C. And then these are just really complicated ones. They're still ABCs, but it's a combination of lots of ABCs to create an X, Y, Z or something like that, YX. And then this is a little bit more complicated. So you have, I think there's like 14 actually. This is there's lots of corrective patterns. That's the point. So it's not very easy to determine what the corrective pattern is going to be. No one, I don't think there's anyone. Maybe we need AI to figure this out. I don't know. But in a gist, what you're expecting is an ABC. Now, the question for me was, do we get an ABC like this? Or are we getting an ABC like this? Or are we getting a ABC like this? You know, like, or are we getting something else, you know? ABC, you know, like ABC, ABC, you know, a combination of ABCs, basically. And that's what you're looking for when you're looking at corrective waves. You're looking at ABC, 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 lots of ABCs. And it's not easy. It really isn't easy. Is that an ABC? ABC, ABC, AB, ABC. Are we going to go down now for another ABC? You know, ABC. And you're still looking for a higher time frame ABC. So it's a combination of ABCs to create your higher time frame ABC. So if that was ABC, ABC, that's your A, and then ABC, ABC, that's your B, ABC, AB, yeah. And actually you need 3, ABC, ABC, so this is not right. ABC, ABC, ABC. That's your A, ABC. Yeah. So we're still miles away from fully correcting. We just, it's not easy to figure this one out, to be honest with you, but it's just a combination of ABCs. Eventually, you're going to end up with one big ABC, potentially, or like I showed you in the diagram, it could be A, B, C, D, E. I'm not seeing that right now. I'm just looking at the diagram. I'm not seeing that kind of behavior. But as time passes, if we are forming this, which is effectively what an ABCD is, well, we'll see. Yeah, it'll become a lot easier to see as time passes. So speculatively now, we're only thinking a simple ABC correction. Now it could be a zigzag, a flat, or a regular, and it could be a combination. It could be an extended flat or something like a deep zigzag or something. But ultimately, it's all speculative right now, because as we see the price move, will be the closer we get to the end, the easier it will be see, and eventually we'll see an impulsive breakout, and then we'll know that the corrective wave is over. Okay, it's very highly speculative. Time has something to do with it as well, and so don't underestimate the power of time when you're looking at the previous correction, which is here. Okay, it's good to see how long that took, and all in all, that correction took, according to this, 274 4-hour periods. So 274 4-hour periods would put us roughly at the end of next month. See, Sunday the 20th of April. So that's what people need to realize. We're potentially continuously correcting. Oh, hold on, I've got a phone call. 1 second. Okay. Sorry, just had a check-in actually. So my Airbnb's, my brother's doing it. All right, so I don't think the correction's over. Like I'm looking at, I don't think this correction morning war morning good evening, I don't think this correction's over. It doesn't, to me it doesn't look like it's over. I think it's too short actually. I'm looking at it now. I don't think it's long enough for this correction to be over. Did I do, if that's the 3 and then the 4's there and the 1, so there's the 4. Let me try and fib time this. I'm going to do this roughly to see if I come up with something. From the 0 to the 1 to the 2. We're coming up to a fib time now. All the way to May. Don't like that. Let me try this one actually. The 0 here to the 1 to the 2. Not really. Not interested in that. David is saying morning. Yeah. I'm not seeing anything on fib time actually, which is a shame. Which makes me like, in terms of the candles though, you looking at them, it's quite a powerful reversal pattern on the 3-day time frame. Back into the highs. That's quite bullish. Back into the highs. I mean, it's not bearish at all, really. When you're expecting down and the price goes up, that's bullish. It's not bearish. There's no signs of bearishness. Even in the weekly time frame, you see this candle with this wick. I mean, that was a bullish candle. Look, it was with a really strong buying tail. Closed well above that previous candle, previous week low. It's a really bullish candle, this candle here. And obviously the monthly one is really bullish. Let me have a look at the different time frames as well. In 2-week time frame. A red doji and the price has come up. Anything else? 10 days. Let me have a look at these different options. Look at these 10-day time frames. Look at these buying tails. Buying. That's what they are. And look at the lows of these 10-day time frames. Look, higher lows. You're making higher lows on these candles. It's quite bullish, really, when you think about it. I'm not really seeing weakness. And I'm wondering, well, I'm actually thinking, because I expected down and it's not going down. Therefore, I'm thinking to myself, well, why then not go up? If you're not going down, then go up, basically. We've come so far up now. Why would we just not continue and at least take out the liquidity from these highs and then see what happens? Do you get a rejection from those highs, or do you get a little bit of a squeeze and you push up higher? And maybe we just push up higher, you know. It's April, like it's the halving month. When I think about the historic price action on Bitcoin, that's a good question. Let's have a look at the historic price action on the halving month. This is the monthly time frame on the index chart. So we're in the halving month. Before it was May. April was bullish. April 20. And then May was bullish. May was the halving month, and that was a bullish month. Yeah. That was a green month. And then June was a red month, and then it just continued. And then before then, May, was it June? June 16 or 17? I think it was 16. It was green as well. So we've had the halving months have been bullish, and this is quite unusual because we're about to close above the previous all-time high 1 month before the halving. Okay. Let me go back to the Elliott waves. So in terms of like, this is the wave 3. This is the wave 1. We do a trend-based fib to the 1, to the 2. That put the extension of the 1-to-1 roughly where the 3 ended. It got slightly higher. That was good. And we have higher targets now. That was from the 1 to the 2. And let me just do it from this one as well. Okay. So that gave you really strong confluence at about 63, and here where the price rejected. You see that? The 1 and the 1.618 came to exactly the same place where the price rejected. For all intents and purposes, that's still going to act as resistance as we go up. So you have to bear that in mind. And when you look higher up, you see at about 95k, there's quite strong resistance too. 95k. Can we line that up with the fib extension? Where is my fib extension? There it is. Which one is that one? Don't know which one is the right one. Can't remember. It's the log one that I'm interested in. Yeah, that's the right one. Let me get rid of that. So yeah, we have a bit of confluence at about 128k and about 95k. 95. I don't think there's any reason why we should just break past 95. Just like that. And I think it would depend on the 4, where 4 stops, yeah? We are in price discovery. I think it would depend on 4. Like, we have to see where 4 stops. I don't... Oh, we don't know yet. That's part of the problem. I think once we have an impulse, we start seeing an impulse, we can see where the 4 ends. And then we can do another trend-based fib to see if we have any alignments in the fib. But at the moment, I can see that there's a little bit of alignment at about $95,000. See that? And I'm basing that on a 0 to 1 to 2 here. And then on this wave 3, I'm basing it on a 0 to the 1 to 2 here. Now you can also do to the 3 to the 4, but we don't have the 4 yet. So I'm just doing it to the 0 to the 1 to the 2. Okay. When you have the 4, you can also do it from the higher time frame, from the 0. Oh no, you can't, not yet, because we haven't got the 4 yet. Also, when you have the 4, you can do a retracement. So we haven't got the 4 yet. Let me just do a retracement from this high to low. What is that? Nothing interesting, to be honest with you. Just from that high to low. There's nothing crazy interesting. Not yet. And for all intents and purposes, these fibs will react, but we're not. I'm not really fussed about the where it's gonna. I'm looking for the area of reversal, really. I'm not just looking for areas where it's gonna react. I'm looking for reversals. I'm looking for where the price could naturally end. And so actually, we don't know where the 4 is gonna come to a conclusion. Are we gonna get and the question for everyone is this: do we get like a push up for an extended flat? That doesn't work because of the time frames. Let me just do it correctly. So let's just say hypothetically we all the way to the end of April we're correcting. Let's just say we do that. Come all the way back there. That's an extended flat correction. And so that's your wave 4 effectively, because we've already had finished our wave 3. That would be your wave 4. Right? This is very speculative. It would be like that. Then when you have that, then what you would do is you would just do a trend-based fib from this pivot here, the 2 to the 3 to the 4. Okay. And then you see higher up, there's confluence. There's confluence at about $109,000, and then higher up, you see where the lines converge. But we don't have the pivot now for the 4 to see how the 4 ends. If the 4 ends there, if not, you know, you're going to be looking lower. So if we go all the way down to 63,000 now, and not necessarily now, like what if the price, and it's a bit, this is all speculation. If the price goes up, swing failure is the all-time high and then heads right back down to there, okay, for like a flat correction like that, but you end there, then you're basically looking at 3 lines of confluence at 95,000. You would expect the price to come to an end at 95,000. That would be your target then. Does that make sense? And then your last wave, your corrective wave, would be like that. And then you'd have another impulsive 1, 2, 3, 4, 5, whatever, all the way up to your target. And that will complete your wave 3. That will be the last wave, the wave 5 of 3. And then you'll be looking for a corrective 4. Probably all the way back down, to be honest with you, all the way back down to the all-time high. Probably. I think that would be more likely than not for the final wave. However the final wave is going to be. And then you do exactly the same thing to try and calculate the fib targets. And so it's really important for us to see where this 4 correction ends. All right. We just chuck all of that into my Elliott waves. W. Okay. And then I'll put the fib retracement in there as well. So when it comes to the local price action, I had an idea of a few things. I had an idea of a harmonic. I had an idea of a diamond. I had an idea of a megaphone. I had a few ideas, and I mean, Bitcoin is basically doing what the hell it wants. It's ignoring what people think, and it's doing what it wants. I don't know if the diamond's in play anymore, to be honest with you. If it was, it would look like, I mean, I don't, you know, it's basically like that. And I think this is the question now. It doesn't look like it's in play anymore, the diamond idea that I had. And that being said, look, we've had a little bit of a swing failure from that pivot. We're back into this pivot. So we're holding support. That's a back test. That's basically as this SFP has become an SR flip right now. And we're still into an SFP. So that SFP short would have worked. I closed it, but it would have worked. I closed it because it wasn't really a planned trade, and anyway, it was a small risk anyway. So we're on an SR flip right now, and we've had an SFP. So we're kind of stuck actually. It looks like the price is a little bit stuck. Where's our local volume levels? There they are. A little bit of a rejection of the value area high. A little bit of a failed auction above it. But we're into an SR flip right now. Is it a diamond or is it a megaphone? Or is it something else? If we don't, and this is the thing, if we don't take out these highs, if we don't take out this pivot here, and then we start heading down, it's not going to look crazy bullish again. It's going to go back to bearish. And you're just going to go back to my idea, my previous ideas that I had of that harmonic. So I'll just draw it again. That. So it's still in play if we don't take out that C. If you hold that pivot, then you're still looking at something like that, potentially. It's possible. I don't think it's likely, but I think in Bitcoin anything's possible. And it doesn't matter that we've come across sideways. It's always possible that this kind of now drops and heads right down to complete that harmonic. Like with Bitcoin, it's always possible. Yeah. So I don't think it's going to happen, but as long as we don't take out that pivot, this is still in play. At the moment, we haven't done that. Okay. I think this is very unlikely, but you just never know. If that was to present itself, if you were to complete the D on time, the timing would be basically a 1-to-1 of this harmonic. I think there's like a 1% chance that this is going to happen. Honestly, I don't really think this is going to happen. But you're basically looking at the D completing here. It has to be on time, which is the 3rd of April. So then you'll be looking for a really sharp sell-off all the way for 3 days, all the way down to complete this harmonic. That's what you're expecting, roughly. It could be 1 day later, or you know. I really don't think that's possible. Okay. But I mean, I'll just leave it there for the sake of, and if that was to happen, it'd be a very easy long. Be a very easy long. That was to happen. That'd be a very easy trade. I think that's the chance of this happening is 1% or less. So I'm going to hide it. And then the other longs that I was thinking about was this point of control. So you've got these naked points of control there, and liking still. Yeah, you got a bit of the problem is it's going to be hard to get down now. Like, we've got a few levels here, and what I'm thinking is we're probably going to be ranging up here more likely than not now. But if we were able to get down here, it's a big if. You've got a golden pocket. Actually, it's the 50%. You've got a golden pocket somewhere in one of these pivots. Yeah, I think it's a pretty good level, to be honest with you. 382. All the way down to this lowest pivot. It's the 382. So I think that's going to be the strongest reaction, is going to be somewhere here. This weekly level point of control. I don't know if this is going to happen anytime soon, but if you do that, it's very likely you're going to get a really good reaction for a long there. See long. And actually what I'm thinking now, I don't think there's a diamond anymore. I don't think there's a megaphone anymore. I think all that's happening now is we are in the range, and we're just range bound right now. That's what it looks like right now. We're range bound, and you can see how the point of control is in the lows of the range, the price is in the highs of the range. So even if the price was to kind of get down somehow, you're still going to have a reaction probably off that point of control on the local time frame. And that, it's going to come into a fib level somewhere. According to this, it's coming down to the 786. You lose the golden pocket, come into the 786, react of the golden of the point of control, and then this naked weekly point of control which coincide on this 786. So you're probably going to get like a local long there, but probably what's happening now is that we are in the range, and we're range bound. That's what it looks like at the moment. You're probably a little local long there. There is a trend line there actually, that if it breaks, it's not going to look great. I'll show you. Yeah. So if you do break that trend line, it's not going to look great. But you're still in the range. Like, for all intents and purposes, you're still in the range. Break down. It'll just go down to there to go back up. Like, just because you break a trend line in the range, what's more important is the range, the volume range. And with the bullishness that I'm seeing, it's possible that this trend line comes down and hits again, and you just go up. It doesn't have to break. So it's good to keep an eye on that. That trend line is obviously reacting, and see how that, if we lose that trend line, then maybe we'll have a little kind of sell off to the downside. But I think at the moment we're kind of locked, and I can't really see crazy trades right now. Probably the next trade will be, the next short will be slightly higher up. Where's these? Got the local volume levels and high time frame levels. Anything? Nothing. It's just a naked weekly point of control into a swing failure up there. That's it. It might, there might be a reaction, it might not be a reaction. No one knows. No one knows if there's going to be a reaction or not. And that would be like that. I think if you start attacking the highs, you're probably going much higher because you'll probably squeeze up. Yeah. And again, it's the same thing. You've got to see if there's a reaction off the if we go up to the all-time high, we get another 2 billion short on Binance. You know, then you have to short that, huh? You can't just ignore that. If you get a 2 billion short on Binance again, and that's the thing, that's what's been happening. The price goes up somehow, goes up to there, and then psh, Binance shorts $2 billion market short. It's been happening every time you make an all-time high. There's another $2 billion short on Binance. That happens, you have to short. You can't just ignore that. That's going to trap a lot of late longs. You know, you're going to get people longing on leverage, and then suddenly short, and then all of these longs are underwater, and guess what they do? They close at market, and the price just comes right back down. So if you do get an SFP of the highs there, you'd probably take that. You'd probably take that trade, but you just have to see the reaction. Which one was that one? That's the highs. That's that trend line. We'll call that a local short. So what I'm going to do now is I'll put a few alerts for myself and take these trades. This one I'll probably take if I get an SFP. Why not? Scalp that. So yeah, okay, good. Still going on. Okay, got that. Where are my other alerts? Where's my long? Okay, so this long, I'm gonna put an alert here. I'll put it a little bit earlier. There's no swing failure here, so I'm just gonna have to look for some kind of invalidation locally. Local BTC, long BTC, like that. and then you have one lower down. The puck long, the point of control long, is much lower down, like there. Don't need to alert that. That's going to be, I'll keep an eye on that. So at the moment we're kind of in the highs, and I think as long as we don't lose this trend line, then it could be a case of us pushing higher. We could be in a situation where we're forming some kind of flat top triangle here. Yeah, it's possible. We could go back down and then break out like that. It's possible. Yeah, we could be in a little bit of a flat top triangle right now. I think that diamond idea is out of the question. I can't see it anymore. Which ones are these ones? Oh, this is the local. Let's pull that to the top. Trends, and we can hide the rest. And at the moment, you know, like it's bullish. Look, it's quite bullish. We had a swing failure. Now, you could short that for sure. What time is it? You're coming back into this SFP line. There's an invalidation. Is it going to go higher? Possibly. Why is the price coming up? Well, let me have a look at EXO charts. Longs are coming in. Just looking at it, I'll show you. Look. Let me go to the right tab. If it loads, God, why is it so slow? There it is. Look. See that? Increasing OI, increasing prices. Longs are coming in. Long. That there was it was a long closing actually. Interesting. This is shorts. Look. OI going up, price coming down. You've got shorts entering here. But for all intents purposes, the CVD is going down, but you're making higher lows. Only slightly. I mean, here it was technically it was a lower low, but you can still see that on average the price is being absorbed. Okay. So you see how the CVD is almost at the bottom of this range, whereas the price is much higher. So for all intents purposes, there is absorption still happening. And as long as people are longing now, you're not gonna like go against the trend. The trend is longing. And you want to see people longing. And that's what's happening now. People are longing. They're longing on leverage. Yeah. I want to start seeing shorts opening. Are they opening now? Not really. Can't see shorts opening. I want to see shorts opening. That will give me the confidence to short. But I'm not seeing it. I saw them some shorting here. And this is shorts closing. You see how the price went up? OI went down. This was shorts closing. So when you start seeing shorts closing, you're not going to short. Yeah, you're not shorting when shorts are closing. When shorts are closing, it means people think the price is going higher. That's why they're closing their shorts, because they think it's going to go higher. Because if that's the market sentiment, then you've got to wait. And when would you short this? Well, there's two ways to short this locally. It would be another swing failure like that, then you can short that, or you're looking for weakness, and it would be basically losing this line here. But you have to bear in mind that there's a trend line down here. So actually what would be better would be to kind of lose that trend line. Then it would be a much easier short, because you've lost the trend line now. A lot easier to short that. I think it'll be easy to short if you lose this SR flip here, because you can clearly see on the 1 hour time frame that the price has reacted as a back test. It's rejected, and now it's reacted. So it's flipped from a resistance to a support line. So if you flip that back into resistance, I think then it will be easier to short with a kind of, relatively speaking, a tighter validation. You could technically, you can short now, technically, but I don't know if I mean, what time is it? Yeah, I'm not really in the mood. I've shorted twice and both of them have failed. So I'm not really in the mood to short right now. I'd rather long. But we'd have to long lower. You wouldn't just long now. You'd wait for the pullbacks. And then the longs that I have in question is, I mean, you're potentially losing that trend line to long. Yeah. But that's where I would long. But I'll be looking to long to take profit. I wouldn't necessarily be looking to long for continuation. If you do come back, you just range here and then you could just long there. If we were ranging here for a while, but I mean, I don't think that's likely, because by then it would be about 4 p.m. tomorrow. Tomorrow is a bank holiday. It's a day off. It's Easter Monday. Is that tomorrow? Yeah. So you're not going to be seeing the same volume as on a normal day. You could potentially short that. All right. Maybe I'll short it, but I'm not going to wait for the end of the day. Let's see. Short that. To the golden pocket. There's your reaction. Take a short. Why not? Just for fun. Oh god, I'm seeing that TRVL has gone up, so I'm going to have to look at it soon. I think it's into the value area as well here. Look, where's the local? The thing is, it could SFP as well, and that's the problem. Where's the local volume levels? Yeah, we're above the local value area high right now. Back into the golden pocket. I mean, it's bullish. I'm going to short it. Just for fun. I could take a small short. Risk a small amount. I'll try and limit in because the volume's quite low. Oh, look, it just came down already. It's difficult to limit in if the price isn't moving in your direction. So I'm just going to have to mark it in now. Okay, just took a short. Very small risk because my invalidation, basically my trade plan is very simple. It's there. And I'll probably be looking to get down to here, to this golden pocket here. Probably there. The problem with this short is you've got a bit of an SR flip going here. So it's a hard one, but you have to take profit there. That's where you have to take profit at this SR flip. It's basically a one-to-one trade right there. If it works. How much am I risking? Well, I have to just calculate that and put the stop up there. 713.60. This on my screen isn't working. Hold on a second. Can't do it. There it is. I've got no keyboard on my Bybit. Oh, that's so annoying. Let me load it up again. $713.60. 713.60. I like, yeah. I'm not even risking a 20th of a percent. Just why not? Just see what happens. I mean, the price can go two ways. It can go up or down, yeah? But the context of why I'm thinking is short now is that swing failure. So we had a swing failure of this pivot. The price has gone down and we're back into the golden pocket. See that? From the pivot high to the pivot low, we're back into the golden pocket. You're seeing a little bit of a reaction. So you have a short with an invalidation. That's your invalidation. So if the price goes up, you get stopped out. Okay. But you're seeing a little reaction in the golden pocket. And so it is possible now that when the daily candle closes, a green candle, weekly is a green candle, month, every candle is going to be a green candle. But then you'll see a little bit of a pullback. It's possible. So when I say possible, it's probable. But it's also possible that the price goes up and you get invalidated first. Yeah, it's also possible that you get a local SFP short. Where was that? Slightly higher up. So you get a little bit of a push up first. It's possible you get a push up, squeeze people, go up, and then come back down. It's also possible you just go up, squeeze, and then go back down. So there's lots of possibilities here. So I'm not going to risk crazy amounts, just a small trade. But you never know, like this could be the top and then the price could head down. And then if it starts to head down, then you're in a really good position. So why not? Look, SFP back into the golden pocket and you can clearly see there's a little bit of a reaction. Yeah? Clearly see there's a little bit of reaction. So we're kind of above the local value area high, but maybe we'll lose it. And then we'll head down to this golden pocket area here. And that'll be a pretty good trade. If it starts to go down, I will be inclined to keep on shorting to quickly build my position up. Yeah. So I just started off with a small position. And technically I could just risk 1%, but I'm not 100%. I'm not like really positive. It's just speculative right now. But basically you're just trading the short back into the golden pocket on the local time frame. All right. The other reason why I'm kind of inclined to do that is because there's a few longs coming in these highs, and I think maybe that we can trap those longs. Okay. So yeah, I mean, I'm slightly up right now. I'm slightly up. It's all right. Look at that. It's okay. It's good to take a trade and then you're up immediately. That kind of gives you the confidence about your idea. Yeah. And the reaction was that wick. You see there's a wick into the golden pocket. That's a reaction. That's kind of what you're looking for. Hi, Jayway. How's it going? Nice to have you. Yeah, it's not live yet. It's going to be live soon, actually. It's going to be live soon. So, I mean, Bitcoin is looking crazy bullish. I am in a short right now, which I just took literally right now. And it's a very small short. And we'll see what happens, you know? We'll see. It's good to be... The great thing about the short is that I got a really small invalidation. That's my invalidation. So it's a really good place to short. But for all intents and purposes, the price could just go down, find support, and just ping back up again. There's no reason to think that the price is going to go down just because you took a short at a good place. Anything can happen, right? Let me have a look. Anything else interesting? We've got this trend line. If we lose this trend line, I'll be much more confident about my short. Doesn't mean I'm not going to take a long. I'll just take my profit, take a long, and then I'll be looking to take another short. Probably, if that was to happen, I'll be looking to take a short back into that trend line for continuation downwards. Yeah. So let's just see how this behaves. But for all intents purposes, we could be forming some kind of flat top triangle. So you get a little bounce off that trend line and actually you're heading up. Okay. So this trend line is probably going to prove quite important in this local price action. Are we forming a flat top triangle now? Or are we just going to break down and continue this kind of flat range like this, like a really flat range? I think, what do altcoins want? Well, altcoins like it when Bitcoin goes sideways but shows strength, yeah? And I think if Bitcoin just goes sideways and just pretty much shows, it'll be quite strong. If we don't fall, then it's be quite strong if Bitcoin just goes sideways. I think it'll be much harder for altcoins if Bitcoin... let me just hide all of these brush strokes now because they're in the way. That short position, get rid of that. Get rid of that now. Keep those and that local long. Okay, let's get rid of that volume area there. I think, you see, if Bitcoin manages, if we are forming some kind of flat top here and Bitcoin manages to break it, go up, squeeze up, and then we start ranging up here, that's going to be really good for the altcoins. That's going to be, we get back above this pivot and we hold it as some kind of support. I think altcoins are going to be flying. Okay. The other scenario where I think altcoins could probably do well is if we just go sideways here. Even if we break down, we just go sideways here for a while. That'd be quite nice. You could be seeing like some kind of A, B, C like that, you know. Altcoins love it when Bitcoin shows strength, and altcoins love it when Bitcoin goes nowhere, but doesn't show weakness. So keep an eye on that. Are there any questions on Bitcoin? TRVL price prediction and AVA price prediction. Yeah. I'll go and have a look at them. See, like the price is pulled back, but I'm not really seeing crazy weakness on this, to be honest with you. I'm in a small short now. Marginally in profit, marginally, just because I had a good entry. But look, I'm not seeing crazy weakness right now. And if I see the price now start coming up there, I'll just close the short. I won't even wait to get invalidated because I don't really want the price to get back up there if I'm in a short. Yeah, I do want the price to get up there because actually I want altcoins to pump. But let's see. All right, I think that's my Bitcoin analysis. I have a few trade ideas. Let me just pull them up again. I'll go back to the 4-hour time frame. Got a long down here. Who knows if that's going to happen. Got a local long here. If we lose that trend line, possible. Somewhere there. And just continue the range. A local SFP short on this highest pivot. If that was to present itself. And then a much higher time frame long if for some reason we were able to get down here. And I think that's very unlikely. But let's see. And that's at the moment, that's what I've got right now. I don't really have anything. Everything else is going to be really difficult to trade unless you have a crazy wide invalidation. You're on some kind of cross leverage account. And yeah, everything else will be quite difficult to trade. You could trade the local range, and that will probably be the easiest thing to do. So let me look at the local range now. We're at the value area high, and if we can't get above it to flip it into support, then you're probably you're heading back down to the point of control. Probably. If you find resistance on the high, you're probably heading back down to the lows. Find support at the lows, you head back up to the highs, and that continues. And if you look at the whole price action from when we began the range, it went from top to bottom to top to bottom to top. It lost it, but as it got back in, went back to the top, bottom, back to the top, you see? So actually, the most profitable trades are the trading the range trades, but the problem is always the same. What's your invalidation? And there's a lot of people now on cross leverage accounts which they have very wide invalidations, and effectively all they're doing is trading the ranges. Yeah, so they'll leverage up and then they'll leverage down, or they'll short the top and they'll long the bottom, and they'll have really wide invalidations. That's kind of what's going on. Okay, I'm not fond of the strength, but you know, we don't take that top pivot, my short's still okay. I could add to it potentially. All right, any questions? Questions? I've got a few drop frames, but it's still okay. What time is it? Okay, we got, now the clocks have gone forward, haven't they? So that means our daily time frame now ends in over an hour and a half. So we're still yeah, we're still a ways from that, which sucks because now I have to stay up until 1 a.m. now to wait for the daily candle. Right. Let me have a look at some other things. While I look at my phone. All right, I'm gonna just be back in about 2 minutes. I'm just gonna get something from the kitchen. And then I think what I'm gonna do is gonna have a look at TRVL first. And then some other things, okay? Probably ETH, maybe Binance as well. Have a look at some of the big coins as well, the big tokens. All right, I'll be back in about 2 minutes.